Alrighty. Welcome again and thank you for joining my channel. My name is Omar Bumayele and I am here to coach you through accounting, certification, and public accounting practices for not-for-profit revenue recognition, and talk to you guys and ask you guys, do you guys even know what revenue recognition means in not-for-profit accounting? YouTube Nation, let me know if you know. My name is Omar Bumayele and this is my YouTube channel. Thank you guys for joining me again. Today I'm going to talk to you guys about not-for-profit revenue recognition and what that means, and what we can do about it as accountants and as truckers and as world travelers, and how we can reach out there and get to where we're going in accounting. So what is revenues for not-for-profit accounting is sometimes you in a not-for-profit organization you receive revenue contribution received. So that's what we're going to be talking about in not-for-profit revenue recognition. And there's services performed recognized when realized or realizable. There's a net assets that are increased without donor restriction and restricted. So we got to watch out for that language. That is something that has a limit to it and a not limit to it. And some examples of revenues earned by not-for-profits are student tuitions earned by educational organizations, and those are not-for-profit, and patient service revenue earned by healthcare organizations, which are also not-for-profit organizations. Also, we have membership fees from membership organizations, which are not-for-profits. This whole chapter is really about contributions received. What kind of contribution does your organization receive? There's many of them, probably like 5 to 10 of them. We're going to talk a little bit about that. Have you ever wondered what these different not-for-profit organizations like schools or healthcare systems receive? They're not for profit, so they have all this money coming in, but they're not a for-profit business. Well, today we're going to talk about how to recognize the revenue and how to see what kind of different contributions are. First and foremost, there's a cash contribution, and it's measured at fair value. And then the second thing that we can think about in a not-for-profit revenue recognitions is promise to give, like pledges. So there's unconditional pledges and conditional pledges, and these are valued at fair value. And unconditional promises and conditional promises sounds like it has a refundable advance in the debits. You debit cash and credit refundable advance. And then there's multi-year pledges. So you get year after year after year, they're pledges. Those are for not-for-profit organizations, the revenue stream. Placed in service approach is also used. Allowance for uncollectible pledges. And then there is split interest agreements, which is shared with other beneficiaries, which is donor contributions of trust or other arrangements, which include charitable lead trusts and perpetual trust held by a third party. So those are valued at fair value, and they displayed as donor restricted. So we got to watch the language here. Well, now we get to the donated services, and they're recognized some of the time. And these donated services are measured at fair value, and they create or enhance a non-financial asset, for example, which is land, building, or inventory, or a required specialized skill that some of these professionals have, like an attorney, an accountant, a donor, a doctor's services. And some of the time they're recognized as if their special skills are required and possessed by the donor, otherwise needed by the organization. It's easily measurable and easily at fair value. And so when you have the donated services that qualify for recognition as displayed non-operating, the journal entry is hold on. Tobacco shop, this is Omar.
Hi, Omar. Say, do you guys sell nasal snuff?
We do.
Silver dollar stuff?
We do.
You're doing great. I will see you in about an hour then, my friend.
Okay, thank you.
All right, bye.
And then, if we keep on going, we debit the expense or asset, and we credit the contribution without donor restriction. So sometimes you get a donation, it does not have a restriction, so you just donate it without a donor restriction. And then there's donated collected items, which are works of art and historical treasures, and they are not required to be recorded. But then there's donated materials. Donated materials have debit assets and credit contribution support, and debit expense and credit contribution supplies. Also, there's revenues kind of like gift in kind, which are donated investments, contributions at fair value, and then I'll just explain to you guys donations as contributions without donor restrictions. But now I'm going to explain to you guys contributions with donor restrictions. Pledges without donor restrictions implied time restriction and thus initially recognized as donor restricted. So sometimes there's going to be a pledge and then it has a donor restriction. So we debit pledge receivable with donor restriction, allowance for doubtful accounts, and credit it with donor restrictions. Also, there's two more entries, but I'm not sure how to explain those. But if we keep going, we have donor restricted support with donor restrictions, contributions with donor restrictions. And then we also have fundraising, which offers premiums like calendar, coffee mugs, tote bags, and these premiums are classified as fundraising expenses. And the way to get to the to recognize the contribution is total contribution received minus the fair value of premiums is equal to the contribution revenue. Okay, other revenues to recognize in the not-for-profit organizations would be industry-specific revenue recognition, which is like educational institutions like colleges and universities, and they make revenues from student tuitions and fees. And basically we to calculate the gross revenue from tuitions and fees, we say assessed tuition fees minus canceled classes, which is the gross revenues from tuitions and fees. So there's also revenues from healthcare organizations like patient service revenues like charity care, and charity care is not recognized as a receivable as revenue. And there's deductions, and basically to calculate the patient service revenue, you gotta do the gross patient service revenue minus the charitable services equals the patient service revenue. Other operating revenues, the main one that we look at is donated supplies and equipments. That's a revenue. Donated supplies and equipment is a revenue, and it's in a not-for-profit organization. It's almost the one before the last of the other operating revenues. And there's non-operating revenues like donated services. So like I said, the last three that we just talked about was patient revenue services, other operating revenues including donated supplies, and the non-operating revenues including the donated services. And all these revenues I just talked about, the revenue streams without donor restrictions was the beginning one, and the last one was with donor restrictions, and how to journal entry those. And that is not-for-profit revenue recognition. Thanks again for joining my channel. My name is Omar Bumayali. Signing off again. Comment, subscribe, and like my video, whatever you can. I'm going to start making more and more videos about accounting and what it means and how we can apply in everyday life, in travel, in trucking, and hopefully in accounting itself, so we can all have a smarter education. This is Omar. signing off. Thank you again for joining my channel. We'll see you next time. GoPro, stop recording.